So much to talk about, so many exciting things. Andrew Fulton, can you join me on the screen? How's it going today?
I'm doing great, Andrea. How are you doing?
I'm doing great. First question, I hear everybody talking about this government shutdown. Should people be concerned, worried? What does this mean?
Yeah, it's definitely not a good thing, right? Like, generally speaking, a government shutdown is when Congress hasn't had the ability to pass a new spending budget by a deadline. The deadline was September 30th. So now today's Monday, October 6th. We're about 6 days into a government shutdown. If you're a government employee that's been furloughed, certainly you should be very worried about this, right? How long are you going to be furloughed? How long are you not going to make money? What's it going to be when you get back to work? I'm going to put it in the scope of mortgages, buying homes, obtaining mortgages, or even refinancing. There is a little bit of impact, right? There are some government loans like FHA and VA and USDA that have varying degrees of impact. For FHA and VA, if things are following their normal process, there really shouldn't be too much impact. There might be a little bit more slowness in obtaining case numbers. On FHA loans, there might be a little bit of slowness if an appraisal needs to be reviewed by the Veterans Administration. Those are the types of things. Slower moving processes might happen with types of loans. For USDA loans, though, if you're looking to buy in a rural area and obtain the USDA mortgage program, doesn't matter which lender you use, I don't believe they'll be issuing new file or case numbers or commitments on USDA loans until the federal government returns. Outside of that, and outside of being a federal government worker, maybe you've gone under contract to buy a house and you've been furloughed, the lenders won't be able to use your income for qualification until you return to work. Outside of those factors, everything should be business as usual in the mortgage business.
Any idea, how long do these normally last?
That's a good question. I think the last time we went through a shutdown was 6 years ago. It lasted for a few weeks. I think other shutdowns have lasted for a few days. I don't know. I mean, this one, there seems to be three camps in our federal government right now. There's a camp of politicians that really just want to get something temporarily passed for the next 3 months and continue to negotiate some of the things that people are arguing about. You have another camp that really wants to further even more cuts in the federal spending budget. They really want to get the government to spend less money than they take in taxes, which they're still not doing yet. And then there's another group of politicians that want the healthcare subsidies that are provided in Obamacare to be reinstated at the end of this year, because the big beautiful bill eliminated those. And so there's a lot of Americans, I think there's nearly 4 million Americans that take advantage of those subsidies right now through Obamacare, and those subsidies would end, and that camp is trying to get those back. So I think all three are kind of dug in at the moment, and there's going to have to be movement in at least one of those camps for a majority to get together and actually get a spending bill passed.
Does this event have an impact on interest rates, which is always the other question we get from everyone? What's going on with rates?
Well, what you tend to experience in a government shutdown is a lot of nervousness in the stock markets. You'll tend to see a pullback on stock prices. Some of the larger investors in the country may be selling some of their stock portfolio to reduce their exposure in the market and entering into fixed income investments for a short period of time just to protect their risk. You're really not, the stock market's basically ignoring the government shutdown, at least for the first week here. It's behaving as if it's not happening. Generally, the major indexes are up in the last 6 days, and there hasn't been much movement in the bond market either. That's the surprise. If this goes on, I think the more direct impact on interest rates is there are reports that come out on a weekly basis. There are economic reports that come out from the federal government, jobs reports, unemployment reports, inflation reports. Those reports are impacted. So last week we were supposed to get a jobs report. We didn't get it. So the market's kind of looking at more privatized reports like the ADP payroll report instead of the federal government jobs reports. Probably not it doesn't cover as much of the market, as much scope to know how the economy's performing. The longer the government shutdown goes on, there could be days and weeks and potentially even months that we don't get key economic data to properly evaluate the health of the economy and the risks in the economy. And that could have direct impact. What the impact is, I don't know. So just because it says the federal government is shutting down, the federal government's not shutting down, right? The military's still operating. They're still going to process Social Security benefits and checks. The VA hospitals are going to continue to be open. Like the essential services are not impacted. I'm sure everybody feels essential in their work. Yeah, I mean, the federal government has deemed what are non-essential services. Like, do we need forest rangers in the national parks to keep them open on the weekends? That's going to be determined non-essential. Is there a need for all the people in, let's say, the VA administration to review appraisals to see if they're willing to make an exceptions? Those are probably potentially non-essential roles. These are just examples of mine. I don't know how accurate they are, but the non-essential roles are the ones that are really impacted by the federal government. The essential roles are business as usual right now.
Awesome. And then we just hit October, which I can't even believe that it's October right now. So fourth quarter, what types of things should we expect? I mean, the government shutdown, of course, is not what we typically expect, but what normally do we see fourth quarter that we can let our agents know to expect as well coming into this fourth quarter?
So let's just talk about the normal business cycle of home inventory and pending sales transactions. Typically, your fourth quarter and your first quarter of each calendar year tend to be the two slowest quarters when it comes to home buying, right? And who knows what that reason is? It could be 1,000 of them. It's more likely that when kids go back to school, people are just a bit busier in the fourth quarter. There's holidays at the end of the fourth quarter. The first quarter, it's cold in a lot of places. I think people wait for it to warm up before they go out there and start thinking about getting their house prepared to sell. And even, a lot of sellers end up being the home buyers in the market, right? Because you're moving from one home to another. So those tend to be the main reasons we all kind of gravitate towards as to why it gets slower. And the drop off is about, anywhere from 15 to 30% in transactions, let's say in the fourth quarter, as opposed to the second and third quarter of a calendar year. So we are expecting it to get a little bit slower. What tends to happen is home inventory increases once you get closer to winter and through winter because there's less buyers out there. But that's not, the data's not telling us that right now. The inventory is kind of flattened off. It depends on where you live in the country, right? If you're in the state of Florida or the state of Texas, and you're thinking about selling your house right now, the turn times on getting that home under contract is somewhere upwards of 90 days today, whereas a couple of years ago was probably more in that 30-day range. So it could take you a little bit longer to sell your house, but that all has to do with, what are your expectations and the price you're going to get and the location of the home and the condition of the house, right? If you don't check the boxes on any three of these, if you're not in an ideal location, the condition of the home's not, superb, and you're really trying to maximize what you think you can get in the market, your house is probably going to sit longer on the market, as opposed to if you got a really location, you've really upgraded everything in the house, and you're really listening to your real estate agent saying, hey, here, this price point here, you could move a home in 2 days in most of these markets. It just all depends on those types of factors. The other thing I would say is we're starting to see more refinancing happening on the mortgage side. I said this time last year, maybe 10% of our business was refinance. It looks like it's more 25% of our business is refinance right now. So if you are a homeowner and you've bought a home in the last, let's say 3 years, coming up on 4 years, chances are, let me give you a good example. And if you're a veteran, chances are you're paying more than 6.25%, maybe even more 6.5%, more than 7%, depending on what you bought your house in the last few years. We ran a rate quote this morning on what's called a VA interest rate reduction loan. It's a really simple, streamlined refinance of a VA mortgage. Really low cost to refinance. You've got a 5.75% interest rate in the market this morning. So there's a lot of clients in the last few years that are able to save money in this market, and it's kind of supplementing a lot of the business for mortgage companies right now through the next 4 or 5 months.
Awesome. And then what do you recommend to, let's say I look at my scenario right now and it is a better rate environment today than it was. And let's say I am eligible for that IRRRL. However, when do I know to do it versus wait for rates potentially to go down even lower?
That's a really good question. I think the first thing you got to think about is how much longer do you think you're going to live in the home or own the home? The longer you think you're going to stay where you are, the more you can save in obtaining a refinance. What really is important though is working with a loan officer that knows how to give you a break-even analysis of, there's a few $1,000s in closing costs, but I'm going to save a few $100s a month in my refinance, or a couple $100s a month. How long will it take me to recoup the costs up front, which most people forget about because they're rolling it into the loan, but there's a real cost there. And, I'd say if you can get a refinance done where it's less than 2 years break even, it'll take less than 2 years for you to recoup the cost of the refinance and you save money afterwards. Just do it. Even if rates drop further down the road, there's no limit to the amount of times you can refinance. You don't want to refinance every 6 months or every year. You'd like to save that money, but there's no guarantees here, right? Like, rates are down right now. Rates could be up tomorrow. They could be up 6 months from now. We don't know what inflation's going to do. We don't know what the job market's going to do. We just don't know. And so it's hard to time things.
Yeah. Awesome. Thanks so much for all that information, Andy. Really appreciate it. And as a reminder to all, please like this, share it with your friends, anybody who would be interested in all this information. Thanks so much. See you next week.
See you.